All right, everybody, it's me, Gregory Mannarino, and I am overwhelmed. Seriously, thank all of you. Thousands and thousands of happy birthday wishes for me. And, I may not write back to the comments, but I do read them. So I want to give you a heartfelt, really big shout out. Thank you all. All right, people, let's get to work here. We have to talk about what's happening, what we heard today, what appears to be unfolding on the horizon, and it's kind of incredible to me. All day long, Fox Business, CNBC, Bloomberg, they're talking about this jobs number this morning that missed the mark. I mean, we're talking about, another 419,000 people that just applied for first-time unemployment benefits. It was a big miss, humongous miss. They economists, the rocket scientists out here, they expected this number to fall, and instead it went the opposite way, and they can't figure it out. I mean, I'm dead serious. I'm sitting here and I'm bouncing, all around looking at, the mainstream commentary, and they literally can't figure it out. Well, we don't know. Well, duh. But I think they literally believe their own bullshit. I guess. I mean, anyone could see this coming from a mile away, and it doesn't stop. This is every single week. Anyway, we got some lovely news here from the Federal Reserve. And an admission, a stunning admission. Are you ready for this one? The Federal Reserve, the U.S. economy is slowing. Not only is the U.S. economy slowing, we are entering a new cycle. Now, I can't say this, but that's what they're calling it. You see? And this new cycle that we have now entered has a potential to hit the economy. What's the takeaway from that? Let me ask you, if you've been with me for any length of time. Well, stocks finished higher today. So what do you think the takeaway from the Federal Reserve saying, number one, the economy is slowing, contrary to everything we've being fish-fed, and then number two, that we're entering a new cycle, a new cycle. You got it? What they're telling the market is, we're going to keep buying it all. Don't worry about it. And the game remains risk on. That's what they're saying here. Now, we heard from the European Central Bank today. You have to understand this, people. And I know you get it yet again. These central banks, they're all a criminal enterprise. Okay? And they're determined to own it all. With their product that they create out of thin air. They just make it. The same as if you had a money printer in your basement and you could buy anything you want at any time. That's what these central banks are doing. And it's an incredible thing. But the European Central Bank, this is a quote, will maintain accommodative monetary policy. So what are they saying here? Rates will remain low or lower for longer as the European Central Bank and the Federal Reserve continue to buy assets. They're going to continue to buy assets, people, and understanding this mechanism. Again, you should smile like this. Big fat smile. Yeah, you should smile because like I've explained to you since time immemorial, okay, the goal here of central banks is to inflate and then inflate more and then inflate on top of that. So the more they inflate, the debt hyper bubble, okay, the debt is in a hyper bubble. In fact, it has yet to be defined. It's beyond a hyper bubble. Okay, we are in a debt hyper bubble, which is, continues to push the stock market higher. Did you see crude oil? Crude oil today surging again, nearly $72 a barrel. Again, I laugh when people tell me about tops in crude, tops in the market, It's insane. But, you're going to get these freaks out here. Jim Cramer called the top in crude recently. Well, guess what? It wasn't the top. Duh. Imagine my surprise. Did we have a little pullback that got bought up? Oh, really? You mean it got bought up? Like the stock market? Oh, no one here knows how surprised I am. It's not going to stop. So get used to it. Okay, I know a lot of you are frustrated and angry and you want this thing to crash tomorrow because you're being told by some freaks out here that it's going to crash tomorrow or today. No, ain't going to happen. And I told you in the video I did this morning, we're a long way off. We are headed for the meltdown of meltdowns. But again, engineered by design, it will happen at a time of their choosing. And it's not going to be in the stock market. The meltdown will begin in the debt market. Did you see the 10-year yield today? It came down. So I'm still not convinced of stability here in the debt market. The dollar got a little stronger. So there's still a little bit of this fear trade going on, which central banks are trying to ease. Again, ECB, lower rates for longer. The Federal Reserve admitting our economy is slowing down, saying that we're in a new cycle now. You remember, don't forget, duh! Okay, we're in that new cycle, and they're going to keep buying it all. That's why the stock market finished higher today. People, it's so simple to understand what's happening and why it's happening. Anyway, on the back of that, cryptocurrencies are getting bid higher pretty much across the board. Gold and silver catching a bid as well. Imagine how surprised I am there too. People, all of you that have followed me for X amount of time, some of you again have been with me for years, really are the most informed people on the market, the inner workings of the market, how this whole thing is playing out, why it's playing out this way, and more importantly, you know what to do about it. Again, believe me on this. Look, I love all of you. I really do. But I have better things to do than sit here and just spew this stuff out of my mouth. I do this because I really feel like it's important. And people need to get a grasp on what is going on around them, to them directly. Like I have said for I don't know how many years now. If you're a member of the middle class, you got to get yourself on the right side of this. You're being systematically eliminated. And this is going to accelerate and is leading up to, as I said in the video this morning, people, the grand finale of all grand finales. We're talking about an implosion, an implosion in the debt market, which is going to create a black hole for the stock market. It's going to create a bottomless, literally, black hole for the stock market because it's the debt market hyper bubble that is keeping everything where it is. It's maintaining this multi-bubble environment that we are in right now. And when this moment occurs, and look, we are going to have time. You and me are going to know relatively accurately, I think, when this whole thing is going to actually implode. And the action is going to occur where? I just told you, in the debt market first. Mark my words. Remember, I'm telling you this because it is the debt market that is the most distorted aspect of the financial system as a whole, being rigged by central banks who continue to issue debt through one door, buy it through another door, and hyperinflate their balance sheets. And the larger their balance sheets get, the Federal Reserve, case in point, and I've been explaining this to you over and over and over, the higher the dog shit fake stock market is going to go. But like I said, do what Greg Mannarino does and keep your eye on that 10-year yield. Okay, you can see this right on my website, traderschoice.net. Understand what you're looking at. Number one, when cash goes into the debt market, the 10-year yield drops. When cash is leaving the debt market, the 10-year yield rises. At one point, people, we are going to see a sell-off in the debt market that is going to make people's heads spin around like The Exorcist. I've said this a million times. When that sell-off occurs and rates spike at an uncontrolled pace, well, it's going to put an enormous amount of pressure on the stock market. That's the big one. That is the key, the clue to the big one, not these dog shit fear trades, where the market falls, 5, 6, 7, 800 points when the 10-year yield decides to dive as cash is making its way into perceived safety and the dollar goes higher. When you see that next time, if you didn't capitalize on it this time, because most of my lions did, well, now you know that you should be buying those kind of dips and betting against this debt, becoming your own central bank. People, if you do one thing, that is start to put away physical silver. It's the most undervalued asset in the history of the world, and it's darn cheap. All right, a little bit each month. Just start stashing it away, stash it away, stash it away. That's how you get yourself on the right side of the debt hyper bubble. And you can do it with one asset. One. You don't got to be Greg Mannarino and be in a gazillion things. And it's hard to keep track of sometimes. But anyway, people, look, very important video. Please share it. Get it out there. I want to hear your thoughts on what I've said here. I'll read the comments like I always do, I promise. Love you a lot. See you tomorrow.